Gold price rises on stagflation fears but correlation with real rates weakest in 2 years as COVID wave worsens. Gold prices jumped against a weakening dollar and euro in London trade Wednesday as new U.S. jobs data came in badly below analyst forecasts, driving longer-term interest rates down and pushing some inflation-protected debt yields to fresh series lows. Such low levels of real rates point towards markets pricing stagflation risk, says a note from U.S. investment bank Goldman Sachs, pointing to 10-year U.S. TIPS yields of -1.2% per annum and comparable German rates hitting -2.0%. With rising COVID cases worldwide now worsening the supply chain bottlenecks that have helped drive inflation up to multi-decade highs, the new wave has not only brought into question the timing of next steps for tapering QE and raising interest rates at the Federal Reserve, says analysis from Canada's BMO. It's also raised concerns that this might be the new normal. Service sector activity across the 19-nation Eurozone continued to surge last month, the market PMI data agency said today, but growth slowed from the new series record first reported on July's preliminary surveys. Yesterday's news of strong orders at U.S. factories in June meantime contrasted Wednesday with the ADP payrolls estimate of last month's U.S. jobs growth, as a net addition of 330,000 across the world's largest single economy missing expectations by more than half. The U.S. government's non-farm payrolls estimate is due out Friday. Consensus forecasts see 880,000 jobs being added. Gold prices rose to $1,825 per ounce on today's ADP figure, towards the top of the last 5 weeks' $40 range above $1,790. But gold typically shows a strong inverse relationship with 10-year TIPS yields, and on a rolling 250-day basis, that inverse correlation has fallen to its weakest since June 2019, giving an R-squared of less than 40%. That's less than half the 91% averaged across 2020. I've been racking my brain over this, says John Lynch, Chief Investment Officer at $2.3 billion asset managers Comerica Wealth Management, but if copper is outperforming gold, that is global investors saying they believe the reflation trade more than they want to be parked in the safe haven of gold. The price of copper, often so closely linked to broader global growth that it's sometimes known as the metal with a PhD in economics, fell 1.2% by lunchtime in London on Wednesday, but it held over 50% higher from this time last year, having set new all-time highs in May. Gold bullion in contrast traded $20 per ounce below its price of this day last year, and is currently $250 below its all-time high of $2,075 per ounce, hit on 6 August 2020 as inflation-adjusted U.S. bond yields fell to then record lows beneath -1.0% per annum. The excitement, and exuberance behind the massive vaccine rollout globally is being walked back, says strategist Nikki Shields in New York for Swiss bullion refining and finance group MKS PAMP. The vaccine is no silver bullet, and it's becoming increasingly politically divisive if vaccinated majorities are required to change lifestyles for the unvaccinated minority. Macro markets, however, retain the "bad is good" mantra. The Delta variant is simply a green light for government and central banks to inject more liquidity and is a net positive for risk assets. U.S. stock market futures slipped 0.1% after the ADP data, but global stock markets held on to earlier gains after recording their second fresh all-time high in a week on the MSCI World Index last night. Conventional bond yields also sank Wednesday, with Italy's 2-year yield below the European Central Bank's deposit rate of -0.5% for the first time today, says Lisa Abramovich at Bloomberg. The entire German yield curve turned negative this week and Japan's 10-year bond yields fell to zero, a level last seen in December. Euro gold prices today jumped to €1,537 per ounce, up 0.6% for the week so far but still 12.2% below last August's top at what was a new all-time high for gold in March 2020 as the global COVID pandemic first took hold. The UK gold price in pounds per ounce rose less steeply, reaching £1,311 to trade 17.0% below last August's all-time high.